U.S. stocks ended Friday higher after key earnings reports from several financial heavyweights. The Nasdaq and the S&P 500 notched their biggest weekly gains in about 2 months. The University of Michigan Consumer Sentiment Survey for January rose to a 9-month high of 64.6 from 59.7 last month. This news provided a more optimistic outlook following the downbeat tone from the big banks, who took center stage to kick off the fourth quarter's earnings season. Their earnings showed continued resilience in the face of economic headwinds, though many said they were taking steps to prepare for a recession in the U.S. And so the world of investing appears to believe that a soft landing is imminent, and that peak inflation equals peak Fed tightening. However, that logic is riddled with risks. The biggest red flag to watch is the potential downward earnings revisions, which so far is looking like the recessions in 2000 and 2008. So, you should know by now what I'm going to say. Be patient. Starting here with the 2-year weekly chart on the volatility index, and as you can see here in the upper left, the symbol is $VIX using stockcharts.com. Now, we've watched this dish here come on down, bottom and base, and move on up. And as you can see here, we did not continue moving on up. It looked like this downtrend, as well as the current downtrend, broke that bottom trend line that was moving on up. Now, I'm not going to say that is a significant variance because I think things are still shaping up. I'm still a bit concerned that we'll bottom and base in the VIX, and then the VIX will head on up, which means that the stock market will head down. Now, what you need to take a look at here in the middle portion of this chart is the magnitude of this move down here in late November, and then the current move on downward here to 18.35. Look at the magnitude. This was a relatively sizable decline in the VIX, but it doesn't look like it's transferring to the charts. So let's now go take a look at the charts. Once again, keeping with the theme of the 2-year weekly chart, this is the spiders, the SPY, with the close on Friday of 398.50. Again, we have looked at this trend line, or actually channel, with the bottom trend line moving through here like this, more or less, and then the top trend line of the channel moving through like this. Now, we're just looks like hitting the top of that channel trend line along with the coincident of the 50 EMA. So now, if you remember, looking at the VIX chart, the VIX chart looked like the last downward move broke the upward trend line in the VIX, but the move here in the spiders hasn't broken through that trend line just yet. It looks like it wants to give it a try, and we'll have to wait and see next week or the week after if it's successful. Now, even if it's successful in breaking up and through this trend line, we got to see how much power and steam is behind that, because it could be another failed move, even if it does break through. So now, moving down to the oscillators, volume is declining from back here. Now, this isn't really true yet. I think we need to see some more numbers come in before that's going to give us any idea of what the current weekly numbers were. Here into the MAC, though, you can see that we had this move on up, came back down here. The fast line came back down and reflected up and off of that slow line. So it is gaining some strength, but it's still below that zero line, so there is still weakness. We want to watch this very closely to see if it continues on up or if it actually crests and comes back on down. Now, a crest with a downward move is, I think, the higher of the probabilities. But we'll have to wait and see for that. Into the histogram, you can see here pretty much the same thing. We came up, we crested, we came back down, we got that reflection, and we're now heading on up. So we have a ways to go before we get to this level here to see if there's much strength behind this move. Into the price rate of change, very strong move on up, but I don't think that this can continue. There aren't many times in this last 2 years when a move has been this long or longer. Certainly here, from that point there to that point here. It is possible, but I think it's unlikely, and even then it does come on down. So I think that this move is going to be truncated. Into the RSI, we're at a moderate 57.43, which is just above the 50 line, but you don't see a lot of strength in that. Definitely things are improving in that direction, but it isn't extremely strong or strong enough, in my humble opinion. Same thing moving on down here into stochastics. You can see that the crest here, the reflection here, and then the move on up. So we're almost near that 80 or overbought territory, which is going to take a lot more strength to get up there. It's possible, but the probabilities, in my humble opinion, again, are declining. The same thing here with the Williams. Williams isn't looking very strong at all, and normally the Williams is the first oscillator to have a strong move, yet we're still below that overbought territory there between -20 and 0. It has more to go. It might get up into that territory there, but I think again the strength is waning, which means back to the chart one last time, which means, in my humble opinion, we may get to this trend line and pop through, but I don't think it's going to be very strong. Now, it is going to strengthen, but I'm looking for a reflection back on down. At least that is, in my humble opinion, the probability. I may be wrong. I'm wrong all the time. So keep your eye on it, and we'll check it next week. And for today, that's ChewDog Charts. Thank you.